This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: the slowing Chinese economy is keeping the oil price low, and might stay that way because supply is rising, and quite quickly. But first, although there were no surprises in the US initial jobless claims levels, they did rise last week to 229,000 on seasonal factors. So there are now 1.65 million people on these benefits, maintaining the low recent levels. No labour market stress signs here yet. But there are signs of lingering inflation pressures in their producer prices for October, with them up 2.3%, a rise from the 1.9% year-on-year rate in September. The October rise was slightly more than analysts are expecting. Higher prices in their booming logistics sector caused the twist higher. The August improvement in EU industrial production was not maintained in September, and it ended down 2% from the same month a year ago. But despite that disappointment, third quarter 2024 EU GDP came in 0.9% higher than the same quarter a year ago, and employment was up 1%. These are their expected levels, so no surprises here. While these levels are low and benchmark poorly with other major economies, they're still positive. The Australian labour market update for October shows employment rising by 16,000, when a 25,000 rise was expected. Their participation rate slipped slightly, allowing their jobless rate to hold at 4.1%. But this also means their employed workforce is 387,000 higher than a year ago, a healthy 2.7% rise. But almost 40% of that rise was for part-time work. A year ago, part-time jobs made up only 31%, so the shift away from full-time positions is rising. And staying in Australia, their largest bank has concluded that the 2024 Stage 3 tax cuts are not flowing through to more consumer spending, rather being used to build resilience or build back some capacity by paying debt down faster, especially mortgages. Container shipping freight rates were virtually unchanged last week, 2.4 times higher than a year ago and 140% higher than pre-pandemic levels in early November. Bulk cargo rates rose 13% last week from the week before in a sharpish move up to be almost the same as the same week a year ago. The US Treasury 10-year yield is now just on 4.40% and down 5 basis points from yesterday. And you should probably note that the share price for Xero hit 171 Australian dollars yesterday, a record high. And the price of gold will start today at $2,574 an ounce and down $15 from yesterday. Oil prices are 50 US cents firmer at $68.50 a barrel in the US, while the international Brent price is now just under $72.50 a barrel. In its November update, the IEA says that with surging supply and cooling demand in China, even if OPEC cuts remain in place, global crude oil supply will exceed demand by more than 1 million barrels per day in 2025. The Kiwi dollar starts today at 58.8 US cents and down 10 basis points from yesterday. Against the Aussie, we're 10 basis points softer at 90.7 Australian cents. Against the Euro, we'll also slip 10 basis points to 55.6 Euro cents. That all means our trade-weighted index starts today at just on 68.5 and unsurprisingly down 10 basis points from yesterday too. And the Bitcoin price starts today at $88,820 and down 4% from yesterday. Volatility over the past 24 hours has been high, at just on plus or minus 3.2%. Despite the slip, the price in New Zealand dollars is still above 150,000. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.